Smaulgld.
Hello and welcome to another Smaulgld live stream. It is Monday the 23rd of March 2020. And tonight's topics: why bailouts are a good thing. I gotta believe. You know, I've heard that before. A lot of people, once they get an idea stuck in their craw, they just gotta believe it. And first time I heard that, the first time it's ever stuck in my head, is when I had a discussion with a business associate about sales. And I had gone through the numbers and I realized that the more we sold, the more we lost. And I said, perhaps maybe selling more might not be a good thing. And my associate said, no, I got to believe selling more is better. And I said, I can understand why you would think that, but why do you have to believe that? Let me show you the numbers. And I would show him the numbers. And it showed that the cost of sale was much greater than the revenue brought in by the sale. And when we had lower sales with a lower cost of sale, there was a profit, but when we had higher sales and the cost of sale was higher, we didn't make any money. In fact, we lost a substantial amount. So, well, no, but I just got to believe we should try to get more sales. And I said, well, maybe we should try to get more sales at a better cost of sale. No, more sales were good, lower sales were bad. That's all he wanted to hear. And then I tried to understand. I thought, well, maybe what he's thinking is the more sales we have, then maybe we get more customers and then we recoup that later on, because the more customers you have, you can then sell them more product later. Well, as it turned out, that wasn't the case, because the more we sold, the less we were able to service those existing customers, and they would inevitably churn out, and that might give us a bad reputation, making it even harder for us to get more customers. I explained that too. Nope, I got to believe more sales are better. So once you get into a mindset, I got to believe, well, I got to believe bailouts are bad. I got to believe that's bad. 2008, what happened? Oh, they bailed out all these criminals, these banksters. So I just got to believe bailouts are bad. And I'm going to agree. Bailouts are bad when a company's mismanaged and they make profits, or not profits, they themselves make a lot of money, and then when things go south, they go run to the government and they say, I printed the money and give me the money. Well, I think that's wrong, and I gotta believe that in that circumstance, absolutely bailouts are wrong. But now there's this new cry amongst people who just got it in their head now: bailouts are wrong, they're always wrong. They're complaining that bailouts in the current circumstance would also be wrong. If you look at the Constitution of the United States, the Fifth Amendment actually says, no person shall be denied property without due process of law, nor shall private property be taken for public use without just compensation. Now let's take the current circumstance of what's going on with the proposed bailouts of these small businesses and other businesses. These companies were not necessarily mismanaged, misrun, or relying on the government for their profits or anything from the government that they didn't deserve. Now, of course, there's a lot of companies out there that are mismanaged, but when the government tells these companies, you have to shut down, well, how are they going to make money? And why are they telling the government to shut down? They're doing it for public use, in a sense, or for public good, because they want to stop the flow of the virus. Well, if you take away a company's ability to do business, you've just taken their business away from them. And I believe that they should be compensated for that. It doesn't matter that the companies had done bailouts, or had done stock buybacks, or were buying, whatever they were doing. They weren't necessarily being run in a way that they could have protected themselves against a government shutdown of their businesses. Another thing that I'm hearing, and so therefore, I don't believe that a bailout of companies that were put out of business by the government, that the government shouldn't put them back into business. I don't see that as the same as companies that were profligate and reckless. Yeah, they should go bankrupt. But if you're running a store and they tell you it has to close down, you need a bailout because they shut you down. But here's the other thing that a lot of people are insisting upon, that the economy is collapsing. If we had had sound money, none of this would be happening. Well, that's not true either. Sound money does not immunize an economy from a shutdown of economic activity. If you have a global pandemic, whether the government shuts everything down or so many people die that the infrastructure breaks down, no matter what the previous economic policies were, no matter how much debt or how little debt, or whether there was a gold standard or not a gold standard, the economy will collapse if there is a pandemic. I'm talking about a pandemic that goes on for years, like the plague. So the idea that somehow all this is happening is because we don't have sound money and now we shouldn't do bailouts is rubbish, as they say in England, because the government is causing this. Now, tomorrow night we're going to talk about why the government is doing this. But that's an entirely different topic. I just want to focus on the cause and effect. That if these companies go bankrupt because of what the government does, it's really not because of what they did. Then the government has an obligation, I believe, arguably under the Constitution, to not even bail them out, but just to, in the words of the Constitution, provide them with just compensation. All right, let's see what you guys are thinking in the comment section. And if there's few comments, then we'll join you again tomorrow night. Tomorrow night, I want to talk about, I've done a lot of thinking on a financial and statistical analysis of the impact of the coronavirus. So I'll go through that tomorrow night. All right, let's see what we have here. We got Ron Campbell here early to the game. Good morning from the East. Will QE Forever 5 finally give the Fed the inflation they've been so hungry for? I don't think so. You see, the problem with the inflation model is it ends up being a wash. Because if people are out of work and they don't have income, then there's no money to spend. And if the companies shut down and produce fewer goods, well, now there's fewer dollars chasing fewer goods and services produced. That's not what causes price inflation. What causes price inflation is more dollars chasing, or more fiat currency chasing, fewer goods and services. What we have right now are fewer dollars chasing fewer goods and services, so that's pretty much a wash. So just putting more money into the system doesn't mean that now people are going to have money to spend on items that aren't being produced. Now, you could have, so for example, you give everyone $1,000. Well, and they go and buy toilet paper. Yeah, that might drive the price of toilet paper up. But it's if the goods and services are not being produced, there's only a temporary mismatch between what's available to buy, and if you give people money, then they're going to buy those items. Or maybe people won't spend the money on those items that are available to buy. They'll wait until the economy picks up again and more items are produced so they can buy. So, for example, let's look at silver. There's not a lot of investable silver available. Now, you can get your check for $1,000. You may decide to go out and spend 150% premium on the silver, and that premium may go higher if we don't get mining of silver, primary and secondary mining, if we don't get the refiners working again, and we don't get the mints minting again, there may be a shortage of silver product to buy. Well, that's a price inflation, but it doesn't mean that you're going to, when you get your money, you're going to push that even higher. You may wait until, if you were smart, I believe, you'd wait until the secondary producers, the primary producers start producing again, because they're not producing because of the virus. They've sent their workers home. And then the refiners start producing again. So just putting the money in the system doesn't necessarily cause price inflation. It doesn't mean that you're going to chase up scarce items when, for example, you don't have to have silver during a period of time when you're just getting back on your feet. That's just an aside, but the point is, fewer dollars chasing fewer goods and services isn't really an inflationary period. Now, let's take a look at the rest of the comments that we have here. Let's see what we got. Okay, hey Lewis, you man of PR in the DR. I don't understand, what's PR? I know DR is the Dominican Republic, Santo Domingo, but I don't know what man of PR is. I'll show that comment. Herb Levin, what does he say here? Criminal bank out criminal bailout to banksters. Horrible, tens of trillions will be spent and portion of that will be stolen again. We are going to discuss that tomorrow night. I was only wanted to focus tonight on why bailouts are a good thing for the companies that have suffered because the government essentially shut them down because due to this these lockdowns. All right, let's see. De La Ville, kind of ironic. People being their right to assemble, practice religions, and purchase a gun. AUAG, what happens with a service economy when you stop everything? Well, correct. Now, if you're a business owner of a service economy, let's say you own a hairdressing business, a nail, but whatever the business is, a restaurant, a diner, and you can't serve because the government says you have to shut down. It's not even like you decided to shut down. You're told you have to shut down. And you have employees to pay. It's not like you've mismanaged your business, and if you were smart, you would have saved 3 months worth of employee salaries. That generally doesn't work in a small business where you can accumulate that type of capital just in case this type of emergency exists. I want critical necessary authorization to be on the beach, says Chuck in Plata. Oh, public relations, I see. Okay, AUAG. Mints closed. Yes. Now here's some information on the silver. Now the other day I said there is no silver shortage, and I was pointing to the fact that what we have is a shortage in supply of minted rounds, coins, and bars, not necessarily a shortage of silver. I also pointed out that if manufacturers needed silver, they could get it. But here's the thing. Manufacturers don't necessarily need silver. Why? Because they have lower demand for their products, solar panels. That's why Nancy Pelosi wants to put in tax breaks for solar, because those companies are hurting now because all businesses are hurting. And across the board, if you're an industrial metal like silver, there's going to be lower demand for silver. So one of the arguments about the gold-silver ratio, they say it comes out of the ground at only 7-to-1. Well, that's because the demand for it isn't that great. If there was greater demand for silver because there was a greater aggregate overall industrial demand, well, then they'd mine more of it, and more of it would be mined. But that's not the case. So for precious metals, what's happened is the mines are shutting down, not because, well, partially because of lack of demand. It's almost a snowball effect. There is a lower demand, and that lower demand is because a lot of companies are shutting down, which means that the mines not only have a lower target to meet demand, but because they're also subject to companies that want to protect the workers, they'll shut their mines down as well. So now you have the circumstance where there's already lower demand. This is like a vicious downward spiral where the mines have less demand for their product, just like oil companies have less demand for their product, and the price is going lower, so they don't want to mine more. And then they decide to shut the mines down anyway, not just for economic reasons, but for public health reasons. Well, now there's not going to be as much, or if any, gold, silver being mined. And then you have the issue, well, what about what they already mined and shipped to the refiner? Well, the refiner says for health reasons, we're not going to refine and this gold and silver. And then the mints, like the Canadian Mint, have shut down. Not because of lack of demand. They could sell a lot of silver right now. They have concerns about the health of their workers. So that's why we have issues with a silver right now, and it's a lot more complicated than it was at the beginning when it was just there was a investment demand for silver and the industrial demand was still being met. Right now, the industrial demand is being met because the industries have kind of shut down, which means that the mines don't need to produce as much. Now the mines are shutting down because they're concerned about the coronavirus. All right, well, another question here. Jay, and please discuss stock buybacks and bailout. I mentioned it at the beginning, and I think it's a red herring. Stock buybacks I believe, are an issue because they actually create the circumstance where a company can, through its board of directors, decide that their stock is undervalued, so they're going to use their cash and buy stock. Now, to me, a stock buyback is a red herring that the company does not know what to do with its cash, has no innovation, has no R&D, doesn't know what it can do to improve its company. Because if you had cash in a company, you may want to hire employees that can help you make more money. You may want to create a new product that requires an influx of capital. But instead, you say to yourself, my job as a director, officer of this company is to maximize the share price. So how else can I maximize the share price? I'll just lower the float, take some shares out of circulation, and buy the stock back with money that I borrow at negative or low interest rates. Now that is a scam, because companies are supposed to exist to turn a profit. And it ends up being, and it's something I've talked about many times on this show, where companies like Tesla make no money. It doesn't even have to be Tesla. They make no money whatsoever, and they exist off the revenues that they derive from stock issuances. So if a company is public and it raises 50, 100 million in a public offering, and then it loses money for 3 years, it's down to its last 25 million, but the company is confident and it uses some of its IPO money to buy back its shares, or it borrows money, well, the stock price goes up. Now they can do another offering. They can raise another $300 million, and the stock price keeps going up, and they never have to show a profit. Now, this is all part of the why you need individual investors, which we don't have. All of the trading, the bulk of trading on Wall Street happens in nanoseconds. It's all by large hedge funds, funds in general, buying and selling on blips. It's not based on company earnings, because you would never have a situation 20 years ago, 30 years ago, where you'd have the market flooded with companies with multi-billion-dollar valuations that have never made a dime in their life. That's just inconceivable, but that's part and parcel of bailouts. However, I mean, not bailouts, of buybacks. It's not just buybacks as part of the negative interest rate environment. There's a lot of factors as to why you have unicorn stocks and why they persist. But it's mixing apples and oranges to talk about why you shouldn't do a bailout because there's buybacks. That's the whole, I gotta believe a bailout is bad because these companies are doing buybacks. That has nothing to do with it. The fact that a company has a high valuation because it did something lawful, even though maybe it shouldn't be, which was buybacks, is not the reason they're hurting or going out of business. Their stock valuation has been hit, but they're not. Remember, a company can exist whether the stock value. Well, some companies. Let's clear this up. A company can exist with a low stock valuation as long as it's bringing in its cash flow positive, as long as it's making some money so that it can pay off its suppliers and pay its employees. But if a company perhaps isn't making that money through cash flow but has funds available elsewhere like borrowing or IPO money, it can still exist for quite some time. Whether they do buybacks or not is not the issue when the government shuts down the economy and your company is unable to generate any new revenue. That's the point. The thing is, people hear it once, twice, everyone repeats it, and they start tying buybacks, share buybacks with bailouts. They're not really connected. A company can be well run and still do buybacks. A company can be trashed by the government shutting your company down. It doesn't matter whether you did buybacks or not, or you ran your company well or didn't. The fact is that your company was hit not with something of its own making. It's not like the company was, if the company did wrong, was mismanaged, and went out of business and then held its hand up and said, government, send me money, yeah, that makes sense. I gotta believe bailouts are a bad thing. But when the government itself causes the cessation of economic activity, which causes the ability of these companies to earn their living, their property has been taken to them, and I believe they deserve a bailout, if you can call it that. I wouldn't call it a bailout. I would call it constitutionally that we've taken private property from these companies for public use. It's like eminent domain, but we have to give just compensation. All right, let's see what else we have here. So will we see cheap commercial real estate if this continues? It says all is one, or cheaper. It looks like, and it's another topic I want to cover, I have another video I want to do on some permanent changes to the economy as a result of what's happened just in these past few weeks. So I don't want to get into the real estate segment at this point, but we'll do that in a couple of days. All is one now. AUAG99, all currency will eventually find its way back to gold. Greenspan. All right. Hello, Max. Max Strong is here. All right, unless I have any other questions, I'm going to close it off for the night, and we'll see you tomorrow to do a financial and statistical analysis of the coronavirus. And then also, in a couple of days, I want to do something on what I think are potentially permanent changes to the economy due to the coronavirus. All right, everyone. Unless I got any further comments, we're going to say goodnight. Unless I can find Bernie. Oh, we got a comment here. 143 Drew Wid. He's saying company buyback to make stock rise, correct. To increase CEO's profit, correct. Reduces cash holders, thus buffer insurance in regards to oddities. Yeah, that's true. That you could argue that if they had $10 million and they blew it on buybacks, that the buybacks aren't worth as much because they've done a bad thing. I.e., they bought stock, now they don't have the cash, and then the value of the stock is reduced, so it's a bad investment, and they can't cash that investment in because that would be a disaster. So now they don't have the cash to weather the storm. That could be true, but it's not necessarily true. A lot of the companies just borrowed money to buy the stocks. Remember, you can't borrow money just to have money laying around. No bank is going to lend you money. You say, why you want it? What are you going to do with it? You say, I'm just going to stick it in the bank. That wouldn't make any sense. So a lot of these buybacks were done on borrowed money. So it's not like what the companies were doing. Now remember, a company like Apple or Google with the cash hoards, they're not in any trouble of not being able to meet their, whether they do stock buybacks or not, it doesn't matter. The companies that are being hit, that's why I'm saying where people are confusing buybacks and bailouts. Most of the companies that are going to require bailouts, especially the small business, they don't have any stock they never bought any stock. They don't have any stock to buy back. And even if a company engaged in a stock buyback, the government still took their ability to make revenue so that they can meet payroll. But I am again, it's not that I'm for bailouts. I mean, it's not that I'm not for bailouts and I'm not for stock buybacks. I'm not for either of them, but they're not necessarily tied the way people have been trying to tie them together in the old I gotta believe. Just like I gotta believe the gold-silver ratio is out of whack and unsustainable, even though you tell people for years why potentially it's incorrect. No, I gotta believe it's going to return to 9-to-1 because I saw it on YouTube 1,000 times. All right. Anyway, we will talk to you soon. Thank you very much.